You know that mountain of paperwork you sign when you get a mortgage? Well, buried deep inside all that fine print, there's a single clause with a ton of power over your property. Most of us never even notice it, but ignoring it, well, that could be a huge financial mistake. So let's dig in and find it.
So that brings us right to it. What do you think is the most dangerous part of your mortgage? You're probably thinking about interest rates, right? Or maybe a housing market crash? The real answer might just be a few lines of text you've probably skimmed over a dozen times.
It's called the due on sale clause. And look, it's always been there, but in today's world of higher interest rates, it's turned into a kind of hidden financial landmine. Let's break down exactly what that means.
At its heart, it's actually pretty simple. This clause says that if you sell your property, or even just transfer the title to somebody else, your lender has the right to say, okay, thanks, but you need to pay us back the entire rest of the loan right now. Yep, no more monthly payments, the whole thing becomes due. That's some serious power.
So what wakes up the sleeping giant? You might think, well, I'm not selling my house, so I'm good. But it's not that simple. A lot of common and what seem like totally harmless actions can trigger this thing and cause a world of trouble. So yeah, the most obvious one is selling the property. No surprise there. But what about this one? You decide to transfer your property into an LLC for some asset protection. Smart move, right? Well, that can trigger it. Or let's say you get married and add your new spouse to the deed. Seems like a totally normal thing to do, but because that's technically a transfer, it can wake the giant, even when zero money has changed hands.
And we're not done yet. Gifting your home to a family member, while an incredibly generous thing to do, could totally backfire if the lender decides to call the loan due. And for all you real estate investors out there, those creative subject to deals, where the mortgage stays in the seller's name, are a classic trigger. Even some rent-to-own agreements can be seen by a lender as a transfer of interest, setting off the alarm bells.
And this is where the details really matter. Just look at this comparison. Gifting the house to your kids while you're alive, that can be a trigger. But what if they inherit that exact same house after you're gone? That's often legally protected. It's the same house, the same family, but the timing and the legal process change everything.
Okay, so after all of that doom and gloom, I've got some good news. You're not walking this tightrope completely alone. There's a really important federal law that acts as a safety net in a few key situations. This law is called the Garn-St. Germain Act, and what it does is it carves out specific exemptions. Now, these aren't some sneaky loopholes. They are actual, established legal protections designed to keep the due on sale clause from causing a disaster during major life events, like a death or a divorce.
So here are the crucial situations where you're generally safe. As we just saw, inheritance by a relative is protected. Also, if you transfer your home into a living trust for estate planning, that's okay as long as you're still the beneficiary. And any transfers that happen between spouses as part of a divorce settlement, those are also exempt.
Now, it's really easy to see this clause and think that lenders are just being aggressive or unfair. But it helps to try and understand why it exists in the first place. They're not just trying to be difficult, they're trying to manage their risk. I mean, think about it from their perspective. They approved a huge loan based on your financial situation. They looked at your credit score, your job history. This clause is their way of making sure they don't suddenly find themselves in business with a total stranger who they've never vetted and who might not be able to pay the mortgage. It's all about protecting their investment.
And this quote right here, this really sums up the stakes. If that clause gets triggered, the lender can force a full payoff. Just try to imagine having to refinance your entire mortgage at today's rates when you were lucky enough to lock in, say, a 3% rate a few years ago. For most people, that would be financially devastating.
So, knowing all the risks and all the protections, what's the smart move if you're even thinking about changing your property's title? Well, thankfully, the answer is really simple, but it is absolutely critical that you follow it. This is probably the most important thing you'll take away from this. It's a simple two-step plan. Step 1, just pause. Before you sign a single thing, before you gift, before you sell, before you add anyone to that deed, just stop. That's it. Step 2, talk to a professional. A quick chat with a real estate attorney can help you map out the safest way forward and potentially save you from a world of hurt. And all of this leaves us with one final big question. This isn't just about a single transaction, it's about your long-term security. So take a moment and think about your own situation. Is your property title truly set up to protect you, your family, and your future? Now you know what to look for to make sure the answer is yes.